Hello everyone, myself Jalaj Nagpal and I welcome you all to EduTap. So yet again, we are targeting SEBI Grade A paper of 2021. In this particular paper, we are going to solve all the previous year questions of finance domain, my friends. And this is your phase 2, paper 2 component. Okay. So basically, we have already solved the finance questions of 2021 which appeared in the phase 1 exam. And we have totally solved, if I'm not wrong, more than 25 questions on that particular video. So if you are prepared to solve all the previous year question, then I would recommend you to watch that particular video, test yourself, and if you are able to solve more than 20 questions, then your preparation is on your track. But if your score is less than 15 and if you are not able to attempt all the questions, then sorry to say, you should start your preparation right now only. I know SEBI has not released any notification, but RBI Grade B and IFSCA Grade A, these two exams are lined up, and finance is one common component which is there in your RBI as well and in your IFSC as well. So this particular video is all for those students who are targeting RBI and IFSC exam as well. Now, before I move ahead, I would like to give you one disclaimer that I'm not going to predict any notification date. Else, because if I predict any notification date, that will defeat the overall agenda of this particular lecture. Right now, I'm just here to solve the previous year questions, and I will also ask certain challenging questions, which are very much similar to the previous year questions as well. So if you are able to solve all the different questions which are there in this particular session, then kudos to you. But if you are not able to solve, then it's an eye opener for you. You should not even just wait for notification, you should just start your preparation, because if tomorrow also notifications come, then even if notifications come, you will not be able to clear it. As simple as that. Okay, so let's start this particular session. But before moving ahead, I have this particular guidebook for you, and this particular guidebook is like one stop solution to all of your doubts. You can see one of my favorite part on page number 23. It's the salary structure of SEBI Grade A exam is given, which is like a quite motivating kick for all those students who are waiting for notification. Plus, you will also find a detailed coverage so as to how to prepare for SEBI Grade A exam. So you can download this particular guidebook from the description box below. It's completely free. So now let's move ahead to the core session. Question number 1 is on your screen now. When the company dissolves, or when a company dissolves, then debenture holders have the right to receive which of the following components? This particular question was there in your 2021 phase 2 paper. Okay, so the options are principal interest, or you can even I would say just say read it by yourself. I'm not wasting much of your time on reading of options. So what is your answer? If your answer is option A, then kudos to you, you are going on a right track. But if your answer is anything beside A, sorry to say, that is not a good thing. Now, if you remember in IBC, that is Insolvency Bankruptcy Code 2016, in IBC there has been one waterfall mechanism. Waterfall mechanism means that if a company is going under liquidation, then debenture holders will be paid first, then you will also have your preference shareholders, and then you will at last you will be paying your money to the equity shareholders. So this is a very general statement which I am making, but always remember that debenture is a type of a debt. I'm sorry for my bad handwriting, but this is how it goes. Okay, debenture is a type of a debt. On debt, you will always be, it will all, on debt instrument always create a charge on your profit. Charge on your profit means that your, irrespective of what the level of your profit is, you will have to pay debenture holders, you will have to pay the debt. But if I talk regarding the equity dividends, that the dividends which we give to the equity shareholders, that is known as appropriation of profit. Appropriation of profit means what? That only if I have sufficient profits, then only I will distribute it, then only I will appropriate it. So just remember, debenture holder is a type of a debt, and under debt, my friends, principal and interest both has to be paid. Very easy question, hardly a 3-second question if your concepts are very much clear to you. So the answer is option A. This is for your homework to read it. Now my challenging question to you is, what is waterfall mechanism of IBC? I have disclosed the answer in the question 1 itself. Now I want you to first tell me what is the launch year of IBC, as we all know, is 2016. Which section of IBC code? Which section of IBC code deals with the waterfall mechanism? Your option are section 51, 52, 53, 54, and 55. Okay, so you have to choose among from these options. This is a very high level question, I know, but if you know this particular waterfall mechanism, it's very important. It's very much in the news as well due to the different insolvency cases which are going these days. The second question to you is, the RBI will issue maiden sovereign green bonds in 2 tranches for an aggregate amount of. So do you know the answer of this particular question? The answer over here will be 16,000 crores. Okay, there will be 2 tranches, each of 8,000 crores. I hope you know all about these facts, because if you are preparing for IFSCA or even if you are preparing for RBI Grade B, then mind you, these questions are important. And the answer of this particular question is section 53. Okay, so section 53 deals with the waterfall mechanism, and question number 2 of this particular question has been solved for you. Coming to question 2 now. Very easy, hardly a 3-second question, a cakewalk. Roles and responsibilities of the Forward Market Commission duties are transferred to which of the following organizations? Is it SEBI, is it RBI, is it SBI, or is it NPCI? The answer to this particular question will be SEBI. Now, earlier, forward market commissions were looking to the commodities market, but now that particular function has been transferred to SEBI as well. Now, this is again a 3-second question, I would say. Those who are marking this particular question as wrong, sorry to say, your position is not good. Prepare as much hard as possible. This is like a mirror which I am showing to you. Don't get scared off, but my only motive is to show you the real face. If you have marked this particular question correctly, then it is good, because this is very easy. So Forward Market Commission, Chief Regulator Commodity Markets in India, but right now it has been passed to SEBI. So this explanation can be read by you. The PDF of this particular session will be shared in the Telegram group. Now here is the challenge. When was SEBI established? SEBI was established in the year 1988. The act came in the year 1992. Okay, I hope you remember these are the 2 different terms which you have to remember, that SEBI was established in the year 1988. The act came 4 years after in 1922. Who is the current chief of SEBI? We all know Madhubani Puri Butch, who is the first woman chief of SEBI. Okay, now here my counter question to you, that is for YouTube. Those who are watching this particular session on YouTube, I want you to let me know when was RBI Act was passed. RBI Act was passed in which year? Because SEBI and RBI works in a very close tandem manner. When was RBI Act was passed and when was RBI established? A very easy question. I hope you will be able to answer all these different questions, and I will be personally checking your answers. So do comment. I'm not saying it comment unnecessary things, but do let me know your knowledge in the comment box. Okay. Question number 3 now. Open interest indicates what? Open interest. Now this is the question which has increased certain level, but again this is a very basic question. If you are trading in stock markets or if you have some exposure in stock market, then this particular question is again a halwa level for you. Halwa, or you can also say cakewalk. Open interest indicates what? Open interest indicates the number of contracts which are outstanding. See, if the larger number of open interest means that there are a larger number of contracts which are outstanding and the market liquidity is good. This is the journal statement which is made. Now, what is this open interest? For example, today I purchase one forward contract, or I should say today I purchase one futures contract rather, because on stock exchanges you cannot trade forward, you can only trade in futures or options, or I should say futures and swaps. Now, or I should rather say futures and options only. Sorry. Now, open interest indicates what? The number of contracts outstanding. For example, today I purchase one future contract of Reliance Limited. Now, when I am purchasing this particular futures contract of Reliance Limited, I am waiting for the seller to come and purchase this particular contract. For example, today if I purchase one Reliance future at rupees 100. Now, if someone is paying me 90, will I sell it? The answer is no, because if I am purchasing at 100 and if I sell that particular future contract at 90, then I will be bearing a loss of 110, or I should say 10 rupees. But if I am, or I should say, if I am selling this particular option at 120, or I should say future contract at 120, then do I have this particular liberty to sell it at 120? Yes, I can sell it, because now I will be taking a profit of 20 rupees. As simple as that. Now, this, when I'm waiting for a good option, my particular future contract will be shown as open. My position is open, but as soon as I sell it, it will be called as closed position, so that will not be counted as an open interest. So open interest basically indicates what are the open positions, like how many people are waiting to settle their own trade. As simple as that. So this is what your overall definition of open interest says. Now my challenge to you in this particular question is that how many depositories on India are present right now? Is it 1, is it 2, is it 3, is it 4, or is it 5? See, there are currently 2 depositories, so I hope you know about them, NSDL and CDSL. NSDL is National Securities Depository Limited and CDSL is Central Depository Services Limited. So these are the 2 depositories which are taking all the load of BSC and NSC. Going long on the script, here script means share. Going long means what? That you are buying. Now what is this? What is the terminology which has been used for the selling? It is known as going short. Okay, so just remember these 2 terms, and it is very important when it comes to the market parlance. I hope you would have got the correct answers of these challenging questions as well. Question number 4, my favorite, and this particular question was quite tough, and if you would have left this particular question, that would be a good call. But yeah, if this question now comes in 2023 papers of RBI, IFSC or SEBI, then you should definitely attempt this question. It's not that much tough. Stock price of current one scrip is 60, the initial margin is 40, the maintenance margin is 20. At what price the margin call will be made? So you just have to apply one formula over here, which we will be seeing in the next slide. But what are your answers now? The correct answer of this particular question will be 45. Why I am saying this? Because of this particular formula. See, first understand what is margin. For example, today if I am trading in Reliance shares, Reliance futures and Reliance options, if I want to take a very big trade, for example, I want to take a trade wherein the buying cost is rupees 5 lakh, but currently I do not have that much money. So what option I have is that I can trade this particular big amount at a very low cost, provided that my stock exchange allows me. For example, if margin required by stock exchanges is, let's assume, 10%, let it be 10%, then I can execute this particular deal by depositing 10%, which is 50,000. Okay, so right now I am only depositing 50,000, but I am taking a trade which is worth of 5 lakh. So this is how margin concept helps different types of investor who are short on funds. But this concept is very much, it also gives a huge exposure, and sometimes some down risk is also over there. So coming to the question, you just have to apply this particular formula. It says margin call price is equals to initial purchase price. Initial purchase price into 1 minus initial margin and 1 minus maintenance margin. Now I am not going too much into the details of initial and maintenance margin, because that will extend the overall video duration of this particular lecture. I just wanted to tell you that what is margin. Initial margin is just the amount which is required to start the trade. For example, in the previous examples we have seen that 50,000 is the initial margin. Maintenance margin is the amount of money required to make sure that your initial margin doesn't go below. As simple as that. Okay, so this is a very basic and a small introduction, although I could have used certain more examples, but let's solve this question now. So if you put all the values in the formula, you will definitely get your answer. Our initial price was 60 into 1 minus initial margin. Initial margin was 40%, you just have to remove percentage sign, and your maintenance margin was 20. Okay, so apply these formula, you will get your answer as 45. Okay, now my only request to you is that try this particular question by yourself. You have seen the formula, try again and change the values. You can take these values. For example, my current stock price is trading at 100 rupees. My initial margin is 80% and my maintenance margin is 40%. So if I give you the same question with three different values, that is my stock price today is 100, my maintenance margin is 40% and my initial margin is 80%, then comment your answers. I will be personally checking your answers and we will come to a common understanding that what is the correct answer. If you are able to solve it, then kudos, but if you are unable to solve it now also, then I will say again revise. Apply this formula and you will definitely get your answer. Question number 5. Question number 5 is one of the most easiest question. It does look a bit tough to solve, but again, as I said, it's very, very easy to solve. Nifty option contract has 75 shares per lot. I'm not reading it again. In the whole transaction, what the expenses is 225. So the question says you that you have to calculate your overall profit and loss. Okay. See here, what I can see is that the premium per share was 50 and you are selling that particular share at 80. So 80 minus 50 is my total profit which I am earning on per share. As simple as that. Okay, now I am purchasing 75 shares and each lot, or I should say I am purchasing 10 lots and each lot has 75 shares. So this is your overall. Now you can multiply it by yourself. I am just showing it for your convenience. Now you can multiply it yourself and whatever the final figure you will receive, just reduce the expenses out of it. 225, right? If you do the same, your answer will be option B. That is 22275. All you need to do is just your multiplication, and all those people who are coming from science background, they could have solved this particular question from 20 seconds only, provided that they know the concept. So SEBI is not only for commerce students, it's also for different people who are coming from diverse background. So this is your particular answer. I have solved this particular question for you. Now my challenging question for you is this particular question. A Nifty option contract has 250 shares per lot and a person has bought 2 lots. So what is the total number of shares which he has bought? 2 into 250. As simple as that. That will be a 500 shares. Okay, so whatever profit or loss you will be calculating, it will be calculated on your 500 shares. The premium per share was 100. Like he purchased the shares at 100 and he exited the option with the premium of 180. So he is making a profit of 80 per share. Okay, so this is your overall gross profit. Brokerage he is paying of 150, so you can just do 150 minus over here and this is your final answer. So if you go by the logic, you will get somewhere around 39,000 as your right answer. Okay, so I hope this particular question is also very much clear to you. The overall funda is that you just have to calculate what is your gross profit, multiply it with the same into number of shares and the number of lot size, and at the last you just have to deduct the expenses which you have paid. So now let's move to question number 6. In which instrument is used by foreign entities not registered with SEBI to invest in Indian market via the registered brokers? Now again a very easy question, provided that your concepts are clear. SEBI Grade A Phase 2 2021 paper. So the answer here will be participatory notes. Why the answer will be participatory notes? These participatory notes are also known as P notes. Okay, now what are these participatory notes? For example, if today someone from the USA wanted to invest in Indian markets, now there are different ways via which he can invest, but in maximum of the ways he would be requiring a registration in India. Registration, I mean that he will be getting his demat account open in India, or either he will be getting a broker in India, and then broker will ask certain number of questions like what is your total income and so on and so forth. But to avoid that particular note, the participatory notes are used. You can use participatory notes and you can skip that particular registration part. You can directly invest in the Indian markets then. So the answer here will be A. Okay, now my challenging question for you is, what is course? You just have to let me know what is course, which has been an initiative launched by SEBI. It is yours. You just have to let me know the full form. Question number 2. SEBI has launched mobile app as an initiative with the view to empower investors with knowledge about securities market. Again, a very easy question. I am not disclosing the answer of these two questions. If you know it, please let me know your answers in the comment box. They are very easy, very easy. And if I'm not wrong, this particular question number 2, appeared in the phase 2 or phase 1, if I'm not wrong, of 2022 SEBI Grade A exam. So if you know the answer right now, do let me know. If you don't know, then Google it, but surely you should know now. I know the answers, I can tell you, but I am waiting for all your answers. Question number 7. Which of the following is not a part of the money market? Money market is a market wherein short-term securities, that is from 7 days to 1 year, are traded. Which of the following is not a part of money market? Clearly, your answer should be option C. Derivatives are not a part of money market because derivatives can form a part of capital market as well, or wherein the larger chunk of securities traded. Okay, so the answer here will be option C. Yes, answer is option C. Now my challenging question to you is, you will have to tell me minimum and maximum days plus the amount of all the different money market instruments. For example, commercial paper, if I'm not wrong, are issued in the denominations of 5 lakh. They can be issued for a minimum period of 7 days to 1 year. T-bills, my friend, T-bills are issued for the period of 91 days, 182 days, 364 days. So there can be different types of T-bills which are issued. Plus, if you take the minimum amount, it's 10,000, right? Do not say it's 25,000, it's 10,000. And if you want the source from my for my information, I can give you in the comment box. Certificate of deposits, my friend. Certificate of deposits, again, you can say that certificate of deposit has a minimum amount of 5 lakh. Okay, we all know this particular fact, and again 7 days to 1 year is the right answer. So you have to revise, and if your revision is on right track, you could have solved each of these questions. Question number 8. Which of the following is the most volatile investment? Very easy. Again, a very easy question provided that your concepts are clear. The answer over here will be FPI. FPI is also known as hot money. Why? Because I can dump that particular money into one country, and after few days, or leave after few days, after few hours, I can pull back that particular money as well. So FPI is a money which flows into the market and it can be withdrawn out in a very short period of time. Now here one more thing is there, which is FDI. FDI stands for foreign direct investment. FPI stands for foreign portfolio investments. Mind you that. Now what is this FDI, my friend? FDI is an amount which is invested into foreign country for a longer period of time. You can also say that FDI is invested in assets. It's invested to increase the production capacity of the other company in which the FDI is invested. Okay. FPI, on the other hand, they are invested in the shares. They are invested in marketable securities, and once you purchase the share, you can sell them the moment when you see that you are earning the profit. So as simple as that. ECB, external commercial borrowings, like all the startups, if they need foreign funding, they can opt for ECB. So the answer is option B. Now what is hot money, my friends? Hot money is something which is very unstable. Like today, if I give you 100, I take that particular 100 on the very next second. So that is hot money. It is not stable. It goes into one country and it comes out of one country very easily. What is the difference between FDI and FPI? See, again, you can find hundred of differences between FDI and FPI, but just remember this one difference, that FDI has been done for a longer period of time, like it is more longer as compared to FPI, and FPI is done for a shorter period of time. FDI is done on the assets of the country, whereas FPI is done on the shares or marketable securities of that particular company. As simple as that. Question number 9, very easy question, hardly a 3-second question. Financial goods and services provided to economical weaker section at an affordable price by financial institution, it is called as financial inclusion. Again a 3-second question, because there is nothing much to discuss in this. Financial inclusion activity definition is given to you. Answer is option A. So here are my questions for you. Are subsidies part of financial inclusion? The answer will be no. Okay, subsidies do not form a part of financial inclusion. Do you know regarding NSFI? NSFI is your National Strategy for Financial Inclusion, launched for the period of, if I'm not wrong, 2019 to 2024. Again, if we're talking regarding financial inclusion, then this is the most important thing. NSFE, again launched by RBI. NSFI and NSFE both are launched by RBI only. Or I should say RBI is one of the major key stakeholder in this. Okay, here the operational period is 2020, 2020, or I should rewrite it again, 2020 to 2025. Okay, both are for 5 years. The only difference is the operation period. Okay, coming to the last question, that was indeed the last question. Okay, that was indeed the last question. If you have solved all the different questions, then kudos to you. Your knowledge is on the right track. But if you are unable to solve different questions, then sorry to say, your preparation is not on the right track. I throughout the session I was bit on a higher scale, like I was speaking very fast first because I wanted to keep this session very small and sweet. So I hope this particular session was enjoyable for you, and do remember to download this particular guidebook. It's a must do for you. So meet you in next session. Now in next session we will discuss the phase 1 question of finance, or let's see what we have for the next session. It's a surprise for you. Okay, so do solve all the previous year questions because they are important. In 2021 we have discussed phase 1 and phase 2 both questions of finance. Okay, so do solve them and do let me know your scores in the comment box. Till then, or I should say meet you in the next lecture. Till then, be happy and stay safe. Bye bye.